Hi everyone, this is a technical analysis on WTI Crude Oil. Let's start with some fundamental background first. Crude oil recently pulled back after the big sell-off following the break below the key 83 support. The trend remains strongly bearish, with the technicals pointing to further downside and the economic data in the major economies continuing to weaken. In fact, if we look at the US, which is generally leading global growth, the ISM manufacturing PMI plunged further in contraction and the NFP report missed across the board, with the unemployment rate ticking higher. These might be just early signals of even more economic weakness ahead, with the Fed likely to keep rates stubbornly high into a recession. That's certainly not a bullish outlook for the crude oil market. Now, on the daily chart, we can see that crude oil bounced on the 75 level after the big sell off seen in the past few weeks. The break below the swing low at 77.70 switched the market structure to a downtrend, which is also supported by the moving averages being crossed to the downside. If crude oil manages to rise even more, the sellers will look to short at the trend line here, where they will have the confluence with the red 21 moving average and the 50% Fibonacci retracement level. On the daily chart, on the 4-hour chart, we can see that the sellers land on the minor trend line here and the 50% Fibonacci retracement level to position for a drop into new lows. The buyers will need the price to break above this trend line to increase the bullish bets into the major trend line and eventually target a break above the 83 resistance to switch the buyers from bearish to bullish. On the 1-hour chart, we can see that we had a divergence here with the MACD right at the trend line, which is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, it was another layer of confluence for the sellers to position for further downside. If the price breaks below this support at 77.70 and the counter trend line, the sellers will increase the bearish bets and we will likely see new lows. Today we have the US retail sales and PPI data, with the market likely giving more importance to the retail sales data. Tomorrow we will see the latest US jobless claims figures, where the market will want to see how fast the labor market is softening. Weak data is likely to weigh on crude oil as the recessionary fears will keep on growing. On the other hand, strong figures should support the market in the short term.